Just making a quick video so that I can talk about some of the things I've been playing around with to try to justify doing a 3x leveraged negative to the NASDAQ and negative to the FANG stocks ETF. So we're going to be talking about SQQQ, which basically is the opposite of the QQQ. This is actually the NASDAQ going downwards over the last 6 months. And this is the SQQ going upwards over the last 6 months. So some people, in fact, even just the Proshares website itself, as I'll show you later, tell you to watch your nuts and basically only invest for short periods and keep an eye on things because they basically readjust it to 3x on a daily basis. Here we are actually on the Proshares site looking at SQQQ. Proshares Ultra Proshares, the daily investment results before fees and expenses correspond to 3 times the inverse, the negative 3x of the daily performance of the NASDAQ 100 index, okay? Due to the compounding of daily returns, holding periods for greater than 1 day can result in returns that are significantly different than the target return, and Proshares returns over a period other than a day will likely differ in an amount and possibly direction of the target return for the same period. These effects may be more pronounced in funds with larger or inverse multiples and in funds with volatile benchmarks. Investors should monitor their holdings as frequently as daily. Investors should also consult the prospectus for further details on the calculations, and so we take a look at the calculations here. Before we begin, I just want to make sure everybody's on the same page here and we all understand some super basics about what happens when the market goes down and goes up. You got $100, goes down by 10%, slicing off $10. It's $90 now. $90 needs to go up by 11.11%. In order to add that $10 back on 90, it gets you up to $99.99, basically close to $100. So in other words, 10% down, but 11% up to get back up. Here we go. $100 goes down by 25%. You're at $75 now. $75 needs to go up by 33.3% of 75. So you add that on top to get you to $99.97, or basically $100. So again, like the spread as you go down lower for the percentage that you need to increase back up again gets larger. $100 goes down 50%. Ouch. You end up with $50. $50 needs to basically have 100% of $50 or another $50 added on top in order to get you to $100 again. Okay? Now here's the big one. Think about this. $100 goes down 75%. It leaves you with $25. $25 has to go up by a factor of 300%. So it's a huge amount. Losing money in the stock market makes it really difficult for you to get your footing and get back up again. Where are you ever going to find 300%? Okay, now again, if you go to the Proshares website, you're going to see this little handy chart here, which gives you just sort of a quick investment tip on what happens if things go up, what happens if they go down, and what happens if they go up and down. But I'm going to show you some more detailed examples of this. I just wanted to go to their website to make sure that they were doing their math the same way that I'm going to do mine. Okay, so I made myself a little spreadsheet here to sort of extrapolate on what the Proshares website did, just to see what things look like if things happened. In this particular case, this is going down negative 10%, up 10%, down negative 10%, up 10%. We just got over the fact that you can't go down 10 and go up 10 and get back to 0. That's not the point. I just wanted to see what happens when it slowly gets eroded away. Basically, you've got yourself negative 10% on 100, which of course is negative $10. So now you got $90, but then you go 10% on 90, which is $9, and it goes back up to 99. Eventually you end up with, after 12 days, $94.15, or a net gain of negative 6%. Well, what happens in a 3x world where it's 3x leveraged, okay? Basically, you go down negative 30%, so $100 immediately lops off $30 and becomes 70, but then it adds $21 because it's 30% of 70, takes you up to 91. But it goes down pretty fast, down to a final value of $56.79 after 12 days for a net gain of negative 43. So negative 6 and negative 43, well, my goodness, that's like 6 times 6 is 36, so that's pretty bad, okay? Here we go. We are gonna take a look at this one. What if it just went down all the time? Negative 3%, negative 3%. Okay, if you trust my math, $100 becomes $69.39 after 12 days, negative 31% net gain. Well, in 3x world, it's going to go down an unhinged 9% every single day. $100 after 12 days, it gets you down to a final value of $32.25 for a net gain of negative 68%. So basically negative 31, negative 68. In this particular case, it just happens to be about 3 times. And what's interesting to note is, of course, as you go down, the amount of money you're left with in the first place becomes smaller. So then the amount that's removed every day becomes a smaller number. But this goes down so much faster, $9 down to $3. It shouldn't be any sort of a comfort, but it's interesting to note that at some point, these numbers will probably converge and you'll actually be taking off less money than you would be over here. But what happens when you're having just a crazy bull market? 3% every single day. $100 very, very quickly becomes $142.58 for a net gain of 43%. Not bad after 12 days. Well, in leveraged world, that gets turned into 9% every stinking day. And these numbers, 9, blah, 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 they become very, very big. Pretty soon, in regular world, you're adding only $4.15, but over here, adding $23, basically almost 5 times. Your final value on $100 becomes $281 or 181%. So $43 or more than 4 times that at 181%. Okay, so this is me basically trying to sort of imitate a real sort of a plausible market scenario where you've got 3% minus 1, 4, 2, minus 2, 5, 2, minus 1, 5, 5, 3, minus 2, 5, that kind of thing. What happens to this money? Well, $100 turns into $125 after 12 days, goes up 25%. Well, let's take a look over here in leveraged world. All of these numbers get multiplied by 3, right? The bad and the good. You go from $100 to $189.05 for a net gain of 89%. So basically more than 3 times the gain, from 25% up to 89% after 12 days in my pretend real market. Okay, here is a Yahoo chart of a month of SQQQ, and it's kind of useless because basically all it does is show you the beginning and the end, and the beginning and the end, and the beginning and the end of each day. It doesn't show you the volatility, which is quite interesting, but this does. This is 5 days. Look at that stuff. Over here we have a value of $61. Down here we are down at $56.99, and down here at the bottom we are at $54.75. The difference between $54.75 and $61 is pretty decent. Even in the middle of a particular, these are 5 days, right? So if you were in the middle of a day and you traded here versus here, I mean, that's a huge difference, $57 versus 61. This is 1 day, just 1 day. The day starts at $60 and drops down in the neighborhood of $54 and change. Okay, so when you look at the NASDAQ in particular, for me, I see 6 months worth of basically a open ladder where the lows are getting lower, the highs are getting lower, the lows are getting lower, the highs are getting lower, and basically just going down in a pattern like this. It is sort of converging, so I don't know whether that means it's necessarily getting close to a bottom or whatever, but I still see it going down. So I bought the negative, the inverse of this, right smack here, right on the time when it pops up for one of its little rallies where everyone's saying, oh wow, everything's doing great, the tech stocks have gone back up again. What does that look like with SQQQ? Well, here is the NASDAQ tanking in reverse times 3, and you can see this ladder going up. And interestingly enough, as this one converges, this one seems to be getting wider and wider, and I'm not exactly sure why that is, but probably just because as things go positive for a long period of time, it ends up doing really pretty well for you. So you buy here, you do not buy here, and you certainly do not buy here, and I'll show you why you do not want to buy if things may possibly go negative. So timing is everything with these things. Basically, you buy here, hopefully as it's bending around the corner and expecting it to go up. And if history is any indicator, even though, of course, past performance is no promise of future gains, it's going to go down, and you got sort of a little head fake here, and then it goes boom up a little higher, and then you got another one of these guys, these little guys, another double upwards thing, boom, and a little double guy, and it goes down, and we might get a little double guy here, or it may just keep going up. So you kind of have to watch it right around here. Is it going to do another one of these guys, or is it going to just keep going up and make a new peak? See, double guy here goes up. Double guy here, goes down, double guy here, goes up. There's 2 guy here, down. Here's our single. Maybe we're gonna get another one right about here. Or does it go up? So either you're going to set some limit sells because you're just going to chicken out, or you have to keep a close eye on this stuff. And as it climbs up nicely in just literally a matter of a day or two, maybe a week, watch to see if it starts rounding the bend or if it just seems to continue to go up. And also pay attention to the news. Here's the thing. Right about here on the chart, right after this low dot here, is going to be earnings for a whole bunch of companies. And here on July 8th of 2022, I don't think the earnings are going to be super fantastic, and news about stuff in general just keeps getting worse and worse. So I've seen two different takes on this, basically that because of technicals, we've gone down 30% for the S&P and for, the NASDAQ and all the stuff, and that generally is what ends up being a recession is 30%. And so that must be that we're rounding the bend. And these articles that talk about this say absolutely nothing about zero COVID policy in China, about the Ukraine war, about the shortage of food, about the possibility of famine in other countries, about the fact that we have new variants for COVID, about just anything that's bad. It basically just says, because of technical, we've gone down 30 or so % on average. It should mean the bottom. We should be able to flatten out and go back up. I don't necessarily buy that because I think that we're in for something that we have never experienced before. And then you get the guys who are negative Nellies that basically do quote every single one of those things, the Michael Burrys and other people like that, where they're basically shorting everything under the sun. And people can blame them. Well, you shorted Tesla 6 months ago, or you shorted it a year ago. And it's like, well, timing is everything. Timing is everything. Timing is everything. Someone who got in right here would have been screwed, but they would have been right over the long term. You see what I'm saying? Someone who got in here could have, felt a little screwed right here and got scared and gotten out, but they would have been right over the long term. Someone who got in here would have been heavily screwed, but ultimately they were right. Do you see what I'm saying? So it's tough, but you have to be able to at least time these little short bits here. That's why I'm trying to make a decision about whether I'm gonna go short on these, like really short, like weeks at a time, or I'm gonna go a little bit longer. We shall see. So how does this all work in practical terms? This is the SQQU, recent performance, and this is the actual NASDAQ 100. It's not that easy to find this information, so they're gonna be showing you this information in two different formats, but let's take a look. The 1 month performance, and this matters when you look during that month, but basically they've got it at negative 3.51 for the SQQ, and they've got it at negative 6.12 for the NASDAQ. Go to 3 month for the SQQ, which is the negative of the NASDAQ by 3 times, is at 16.16%, and for the NASDAQ itself in the last 3 months has been negative 20. So the thing I'm not sure is whether you take negative 20 plus positive 16 and add it together to get 36%, but that's pretty cool. 6 month is at 49%, okay, for the SQQ, compared to the NASDAQ, which we're gonna take a look here, is at negative 25.31, and year to date is at 59%, and year to date on the NASDAQ right now is at negative 27.8. So if you had started at the very, very beginning of the year and just thrown your money into the SQQ, you should be doing 60% at this point, regardless of the intraday changes. And you can increase that percentage by 5 to 10 points, just depending on the time of day that you got out. All right, this is a little coda to that video to just sort of show you what happens if you try to go long. This is the QQQ, it's close to the NASDAQ, so I'm gonna use this as an example. Basically on June the 16th, you've got this low spot, okay? Right here where this line is, but if you look over here, there's a low spot recently that's even lower, okay? So that would be today-ish or so. It's lower than the low spot, which was right here. Do you understand what I'm showing you here? If you were to go long from here to here, you would expect, and if it's the inverse, this would be one number, and you would expect this to be even higher in the negative, right? Wrong. Here is the 16th of June. It's this high. And then you go over here to today, and it is not almost to the top here. It's not the same. Like, this value is $66.09. This value here is $63.20. So there's been some erosion from the 3x leveraging down and then trying to get back up. It never quite makes it back up. It's not like they actually rebalance every single day and then start it at 3x of whatever the NASDAQ was and then give it a running chance. Or actually, maybe they actually do, but it's still, there's intraday, there's so much negative erosion that it takes away your money. So you never ever want to stay long in these things, if that makes sense to you.